Ladies and gentlemen of the crypto space, we're live on a Friday, June 7th at 11:46 a.m. Good morning, everyone. I am so old. I really am so old. With this not really receding hairline, but damn, that's getting sparse up there. So I'm so old, I remember when. That's the point of today's conversation. So old, I remember when stock markets gonna crash. I remember when the dollar's done, the dollar's over. It's the end of the game. And clearly that has not occurred, but it kind of did occur. And as I watch content, old content, as well as most recent content, I'm reminded of what I've come to as the understanding of where we are. It's like the story I tell you, you walk into a forest, you better know where the hell you are. Otherwise, you're flying blind. You're going to get lost. You're not going to have a game plan. You're not going to have a strategy. You're going to be nervous. You're going to be anxious. Understanding where you are is the most important thing you can possibly do so you can navigate well and make good decisions. The stock market did correct, but it's not the correction people thought. Clearly, in 2022, the top in 2021, we had a bear market. You look over wherever it is, S&P futures, you can see it. Oh my God. We had bearishness in the market, plenty of points in time. We have to zoom out to get a good perspective. What the hell am I looking at here? Look at 2022. Oh, the horror. So there's your crash. But it's not a crash. It's because people are thinking in apocalyptic terms. They're thinking way too hyperbolic based on social media conversation and fear and not knowing the mechanics of the system. I don't give a crap about this chart. I don't give a crap that it's at all-time highs and just pushing higher and higher and higher. I don't give a crap about Nvidia. I don't give a crap about GameStop because they are all heading down the wrong direction of understanding how the market works and how they could capitalize on it. So 2 points I was thinking of when crafting today's conversation. Now, the first one was obviously understand the mechanics so you could be comfortable. So the mechanics indicate that we're in a position financially of transitory strength. It's always transitory strength and it's always transitory weakness because this is a managed financial system from a currency and debt level, and the nature of the debt implies it must be managed. Nature being, it's past the point of no return, that this is a completely artificial system that is a manifestation of geopolitical collusion at the structural level. How else do you manage the debt? You can't have the stock market going down 75%. It won't recover organically. And frankly, the stock market can't go down 75% because the amount of liquidity in the system required to finance outstanding debt obligations means if this goes down, they are going to manage the liquidity, and that excess liquidity is going to find its way to the market, and discounts will be purchased. There is no down. If you zoom out just a little bit, it's up only. And this is for a long time. Even 2020 was a mean regression to 100 SMA in the monthly. It's literally spot on a mean regression. Somebody got discounts. To get a discount that he got in March of 2020, you had to go all the way back 4 years to 2016. Someone got a 4-year discount on some S&P shares. Ew, disgusting. So if we understand that the market is basically a metronome at this point, centered around the absolute requirement for nation states to refinance their debt, and that obviously is a larger perspective on corporations and individuals refinancing the debt, because if the corporations don't refinance their debt and the individuals don't refinance their debt, nation state GDPs are going to actually be hammered, and that clearly impacts the capacity for the nations to refinance their debt. So it's all one story. It's all about debt refinancing. So if we understand cyclically that conditions will be massaged or pushed in either a favorable or unfavorable direction with regard to asset pricing, we can make appropriate decisions. And that's like top 2021, Q4 2021, when Fed starts to remove liquidity. They're going through quantitative tightening type conversation. They're going through interest rate hike conversation. And that impacts the global system where liquidity is going to be sparse, drives up the dollar, drives down asset prices. We're clearly not in that situation right now. If you all remember conversations over the last 2 years, the tone we carried, the topics of conversation, were not as they are today. We are in the trough period of liquidity, and obviously, as Mike Howell talks about, we're past the trough, and we've seen bottoming, and we've seen strength. We have not entered the expansion period where things get frothy. Exuberance is prevalent, and then we'll start talking about the top again, and y'all be like, that it's that's the cyclicality of it. And that's what Raoul talks about, how everything has become just this 4-year cyclicality of massaging liquidity to refinance debt obligations. Okay, so if I'm so old, I remember these times 2-3 years ago where he talked about crash and where's it going to go, how low is it going to go, and now we're in this time where how high is it going to go and how exuberant is it going to get. We really must remind ourselves of how we grow up and how we evolve to engage with this market that now we have a better understanding of. The entire start of this conversation today has been to get a sense, or to at least tell high level the story of how things work. Now clearly there's much more detail to it, which we've discussed over the years. And we're at the point where I have expressed to you guys it's so much more important to have a sustainable methodology, something that is more strategic, something that is more structured than what the general public do, which is capital gains and buying low and selling high and not having this 10,000-foot view, or walking into the forest and not walking into trees and seeing the trees, but not seeing the whole damn forest. Zoom TF out and have some sort of structured perspective. We understand it's going to be cyclical, so you're going to be in this market in 4 years and 8 years, unless you plan on dying before then. That's a little cynical. So don't plan on that. Plan on 8 years from now, 12 years from now. You're not going to want to be doing the same things you're doing today in 4, 8, 12 years. So build today what you want in 4, 8, 12 years. So if you're thinking from a 4, 8, 12-year perspective, and you're thinking about, oh, I got to buy GameStop so it goes up, and I'm going to sell it at the top. It's a zero-sum game. The amount of capital that goes in appreciates the price point, and then when people start selling, the amount of capital that could be extracted is basically the amount of capital that went in. If you turn off capital inflows, clearly it's a free market, so there's always capital inflow when people are taking profits. But let's just say capital inflows were turned off. The amount of capital that went in is the amount of capital that comes out. So you see this whole group psychology of folks that are to the moon, diamond hands, hold, hodl, hodl, hodl. And everyone cannot sell at the top. That is the craziest thought. That's not mechanically how it works. So we literally talk about mechanics here of the global financial system. At least everyone who listens to my stories can understand the mechanics of an individual asset. As a notable talking point, because today is all this you see on social media regarding GameStop and good old Roaring Kitty, and I saw this commentary, and I'm just don't be these people. 104 people watching right now. That's sometimes I get larger numbers, 300, 400 people. I think I had 500 people at one point. I appreciate all of you guys, and I don't mean to diminish the quantity of people that listen to me, but I always think such big picture. If 500 people are listening to me, that's zero. You're an ultra minority. You're a small group of people. In the hundreds of thousands of people that are so watching what's going on with GameStop, like, oh my God, it's going to go to the moon, it's going to go to $150, and I'm going to have $1 million on paper, and then everyone starts selling, and you get out with $5,000. Because it's not a sustainable methodology. It's something different, something more rational. I mean, it's really interesting to watch. It's a fascinating video that Jacob was able to capture. Absolute insanity. So craft today what you want in the future. And what I want in the future has nothing to do with selling. It has to do with the least amount of work as possible, and let other people do the work for you. So if we know for a fact that other people are going to behave like this, they're going to go up and down and left and right and to the moon and hodl and get all frantic and exuberant and excited, let them. They'll be doing the work, because that's work. And I don't want to do that work. I just want some transaction fees from that work. I mean, frankly, literally, this is the story of Larry Fink. This is the story of the brokerage houses. That's why Larry Fink wants to create a new exchange in Texas, because he sees all of this activity, all of this financial activity in the crypto markets. He just wants some transaction fees. I mean, I could think after tech folks and himself have finally realized this, he definitely had a light bulb moment. And that the tech folks said, Larry, they already built the exchanges. They already built the infrastructure. So all you're going to have to build in Texas is just a custodian operation. And you could charge 0.01% or 0.05% and just tack on another fee on top of the already built infrastructure. It's crazy when he probably realized that, because I can imagine myself realizing that from his perspective. And I'd be like, oh my God. He has no infrastructure to build. Everything that the New York Stock Exchange is, and so much of their infrastructure, is literally the things that we engage with on a daily basis in these crypto markets. He could just tack on. I mean, frankly, we even have that. We even have what Larry's built, because we have aggregators of aggregators that tack on a little fee, facilitate a cross-chain transaction, and it's an additive fee because it's a service. And he's just going to do that in meat space land in his full regulatory compliant fashion, such that it has the same presentation and appearance as a Fidelity or whatever, what have you. It's remarkable. He must be like, oh my God, they already built it. Anywho, that was the thought that came to my mind, that I'm so old, I remember when, because we've been doing these conversations for a couple of years at this point. The liquidity cycle hasn't even started. The capital expansion cycle hasn't even started. They just finally mean regressed from the downside back to neutral, where things aren't falling apart. Hasn't broken to the upside. Not even past Bitcoin all-time high. Oh my God, the next couple of months are going to be fascinating. And by next couple of months, 6 to 12 months. Oh, Sir Joe, President, accounted for. Arrows in the house. Trevor, hello. Anisette, Irreverent. Well, why we like listening to the Captain? We are nerds of capital? Yeah. This is your methodology. This is your prescription for comfort. They were always, Buffett and other folks were always right. Timing the market wins, beats timing the market, because then you're not selling your time, because it requires work to time the market. And I don't want to do that. Your responsibility is to put in the work, now, such that in 4, 8, 12 years, you don't really have to do anything because he made the right choices today. And then other people will be putting in the work for you. Literally the people you're staring at right now. Because Larry wants to sell all of these people access to the things that we have been investigating and studying for years. And then these people will be creating transaction fees, which we will be capitalizing in 4, 8, 12 years. So as much as I talk about XYZ, that's today. It's important because that's measurable. It's quantifiable. And it's also risk adjusted. If you can make X amount of capital based on an investment, it's meaningful. It gives you a sense of what is working right now. The Z component says in 4 years' time, what will that X and what will that Y be? 8 years' time, what will the Y be? And then you factor in the Z component considering immutability, the networks, and the concept of determinism of smart contracts. And you quickly realize these crypto markets are so much more risk adjusted as compared to businesses in equities land. And that's what I've been working so hard for, to find that comfort, to find that risk adjusted way to own a business and have exposure to these folks that are going to do the work for me. Hope that helps. Diego, hi. Athletic Concept. Hey, Noah, what's on the menu for the stream today? Obviously, the introductory monologue, as always, but now my favorite part of the stream. 136 people now on the stream from X and YouTube. Please hit the comments and let's do what we always do. We have a Q&A conversation. It's my favorite. There are 250,000 people watching Roaring Kitty. 20 of us here happen to be here. This is the rational perspective on what Roaring Kitty is doing. Well, the people watching his content are certainly contributing to what he's trying to achieve, which is to blow out the system based on the mechanics of the system. So fascinatingly, he understands the mechanics of the system, options and derivatives, and he's taking advantage of naked call sellers, which is going to cause a hell of a squeeze, which is going to blow out the shorts, and frankly blow out the naked call sellers, because they're going to have to buy spot in order to service the options contract. He just looked at the numbers. In many regards, that's what Michael Berry did in '08. He just looked at the numbers. And that's quite fascinating, because that's kind of what we do as well. We just look at the numbers and see the structure of the system, and we're taking advantage of it. We're just doing it at a much longer time frame. He's doing it in a very compressed. He saw the state. He saw an imbalance in the state, and he's going to blow it out. 250,000 people. That's a remarkable thing. If you had 50,000 people engaging in trading activity, ferocious day trading activity, how much revenue we'd be making in our line of work? And that's only 50,000. If we had 250,000 engaging on Ramses, oh my God. And that's zero in the grand scheme of things of a population. 5 million globally, because these are global businesses. Let's say there's 10 million people engaging in this opportunistic trading experience that Larry Fink wants to offer. And transaction fees would be absolutely wild. So that's where we are, putting the whole Roaring Kitty thing into perspective. There's no opportunity to be had there from a capital gains perspective. And clearly everyone watching it doesn't understand that. If you buy GameStop at $50 and it goes to $150 and he bought $1,000, he turned $1,000 into $3,000. What the fuck? What the hell? What is that? Is the most rudimentary of calculations. There's no opportunity. And that doesn't really work in the crypto markets either with the meme coins. Very few, if not zero, turned $1,000 into a mil, into 10 mil, because it's all insider trading and it's all team issuance. So it's a very controlled environment, very perverted in many regards. So just what I have told as a story for so long is most folks don't dig into the system and the mechanics of the system, how the meme coin operates psychologically. And that is exactly what's going on with GameStop. They don't understand the mechanics of investing. It doesn't because and you're getting people get jaded by the hope and of richness and don't have reasonable targets, and they don't understand they cannot achieve what they're looking to achieve by doing what they're doing because it requires maths. They're not executing the maths. The maths don't compute. The maths don't check out. Listen, you put 50 mil in a GameStop at $50 and it goes to $100, you make 50 mil. Every one of these names and every one of the 250,000 folks watching, the maths don't check out. Throwing in your $50, $100, $1,000, your $5,000, considering your expectations. Expectations are everything. That's why literally in our Discord we set the most reasonable expectations, and literally my expectations are merely continuity. That's how low my expectations are, Era. I'm just expecting X, Y, and Z of today's Friday, of this past Wednesday and this past Thursday, to be more or less the same next week. And this way, I have set the most reasonable expectations. And that's why XYZ is a very reasonable, sustainable, psychological perspective to have. I have no exuberant expectations. I know things are going to get weird and things are going to get gross, but my expectations and everything about my lifestyle, with regard to income and expenses and liability, so on and so forth, are based around my expectations for next week. In a market where exuberance reigns supreme, I'm the most rational person in these crypto markets. I don't have exuberant expectations. Just the way it is. You get a Morpheus quote yet? I think it's inevitable, this athletic concept. Feel welcome to paste it. I'm sure folks will be interested. If you found that over time, one of your V33 purchases wasn't productive, would you sell the NFT? Of course. So what is the most important perspective to have on the VE33 exchanges? One, they've clearly dominated the charts with regard to volume. So they've executed an overthrow of the incumbents, which is extraordinary. Two, you are exposed to the fundamental network, the market. The odds are all the L2s we've exposed to will not all be as successful as one another. One. Two, we don't need them to be as successful as the most successful market. We just need them to continue to be successful and continue to exist. So in 4 years' time, if Linnea has grown 5x in liquidity and Nile is as productive as it is today, one, that'd be pretty damn cool. And now you're assessing your portfolio composition with regard to opportunity cost. Maybe other markets have gone 10x, 100x on revenue. And if you're making the same as you are now in 4 years' time on Linnea, all right, maybe now you have opportunity cost. Maybe you can use that capital. Of course you sell it. Albeit, I would encourage everyone to have very similar lifestyle in 4 years' time. So maybe that revenue in 4 years' time is still quite extraordinary. So don't change who you are if you start to make excess capital. Be reasonable. Try and be humble as best you can, and then don't be greedy. You don't you don't need as much as people think they need. You don't need like, oh, I need so much money and I want to be rich and fly around in private jets and go to church or some shit or temple or pick your faith that gives you your commandments and I'm not that person. I'm a very agnostic person, but I appreciate all that shit about setting or being reasonable as a person. And all I want, my freedom, my richness, my wealthy, is sitting in the backyard when my kids get home from school after spending 2, 3 hours doing a stream with you guys and watching the markets and sitting in the backyard with my foldable phone or whatever and keeping up with information, keeping up with the markets, keeping up with where the financial system is, waiting for my kids to get home from school. Girls, jump in the pool. It's Wednesday. All the bills are paid. I don't need to be rich, guys. I just want the bills paid, and I want to be free to make choices. And that's freedom. If you can pay your bills clicking a button once a week, twice a week, doing some voting, which will probably be automated in the coming years, that's what I want. Maybe it took years, 41 at this point, maybe it took all these years to realize that's rich. That's what most people probably should want. So I don't think that's greedy. I think that's just being smart about what can be achieved in a market that is just grossly exuberant. And that's what this crypto market offers, which is not achievable. That's what I always come back to. What I just described as my richness is not achievable with equities. That's not achievable with a 401k. That's not achievable with a Roth IRA. That's not achievable with your DCA, GameStop, or Nvidia position. So you can't do. It doesn't work. It doesn't work. You can't do that. That's where my excitement comes from. Because in 4 and 8 years, we're on the cusp of being able to achieve something you can't do with traditional markets. That's my excitement for the crypto space, not I'm going to be rich. I'm going to buy a meme coin and turn $1,000 into 10 mil. The fuck are you going to do with the 10 mil? What do you think wealth managers are for? Family offices are for? To manage capital, because capital is either evaporating, being consumed, or being put to work. Owning businesses so other people can work for you. Hope that helps. Errol. It's a good point. It's just the same calculations we constantly do. Opportunity cost, how much is it paying? Have we met our expectations? Have reasonable expectations? I think you're in a very similar position to myself, having worked in industry for so long. You have capital that you've saved up and you've deployed it to own businesses that produce revenue, and you have reasonable expectations also. And I think in 4, 8, 12 years, it's easy for me to get excited because I know it's going to get freaking weird. But I also know that if 10% of my excitement of how weird things are going to get occur, that's all I need. That's all I need. What did you think of non-farm payrolls and unemployment rising? So everything is perverted with regard to the system being the political system and the employment and the composition of the population because of the demographic collapse and birth rate. You had zero growth in American human beings over the last 12 months. The only growth has come from immigration. And you have the whole political conversation of illegal versus legal. You literally have demonstrations and protests in New York of illegal persons wanting more rights. What do I do with that conversation? I'm not, that's, I don't want any part of that conversation. It's an absolute disaster. It's an absolute mess. And there's way too much opinion. And I don't fight other people's opinions. I respect other people's opinions. And everyone in social media loves to insert themselves into other people's opinions. And I have no time or patience for that type of conversation. Have your opinion. Good, 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 good. I don't like conflict. I just, my opinion is it's disappointing where we are. It's disappointing that clearly there's been economic mismanagement that has produced significant consumer price inflation, especially in housing. There's some content that expressed it was $58,000 that was required pre-2020 to live in a house comfortably, and now it's $108,000, which means disparity is rising, and which means social cohesion and civility is decreasing. That's unfortunate. I don't want any of that. It's disappointing all over the place. There has been no growth in U.S. citizen employment since 2018. The only growth in employment has been foreign persons in the United States gaining employment. So clearly there's the whole underpaid part of the population, and I consider myself part of that for a long time. To 2010 to 2019. I was angry and frustrated, and I went from job to job to job. I had no loyalty whatsoever because I realized probably in like 2015, 2016 that the only way you could get to anywhere meaningful is to literally just, the second you get a job, update your resume and try and find another job. Because you're not going to get raises. So the best raise is you get 10, 15%, 20% bump in your salary by going to another job. Boom, do it, do it, do it. And that's what I did for a long time for my career. It was just get another job. And then I found back in like 18, 19, the only way you were going to potentially make it is two jobs. So I was running contracts. And this is common in software industry, and you could run a contract, be a contractor and not a W-2. And I would run two contracts. Now, bear in mind, I was capable of this because I had the capacity. How else do you say it? The intellectual capacity to manage time, stand up and scrums and whatnot, and two Jira boards and all the software development requirements of two companies. And I did that for a long time. That was double the salary, and that's double the salary of a software engineer. And then I remember in late 2019, 2020-ish, and this was around pandemic time, that I told my wife that I couldn't do it anymore. It wasn't just burnt out, it was to the point where I could have cried to her saying I could not do it anymore. I couldn't do it anymore. I have to quit these jobs, these contracts, and take something comfortable. I couldn't do it anymore. I was tapped out. 18 hours a day, and I was burnt. I was burnt out. It was not. It was sickening. And that's a little glimpse of the captain's story that Rahul has brought up because of how perverted the system is. So the only way out was to take a step back, and I took a job with the company I work for now. And I'm very fond of the work I do now. In fact, I did some great work yesterday. I wrote this custom view in Android, and it's a little beauty. I made a little sliding button with a progress bar, and it's probably the most fun work I've done in quite some months. Uh, Not often you can get to make a custom widget. Anywho, so quite happy nowadays. It's taken a long, long time to get to where I am with regard to expectations and how you could achieve your expectations. That's the most important thing any of you guys could find in your life. Set reasonable expectations and set reasonable time frames to achieve your expectations. And more is not an expectation. It's not. It's not reasonable. Hope that helps. And morning Noah, what am I missing? You said only your basis is counted on the APR, but when does the increase in the value of your token during the lockup realized? Never. My business, my actual business, which I have documentation for, which I have written, because lawyers are frickin' expensive, and now with AI, I could be my own attorney. And you get your documents checked, but getting your documents checked by an attorney doesn't cost the same as your lawyer drafting your documents, which is actually impossible for a lawyer to do because I am me and only I could define the business that I want to create. So I've created a business, and my locked positions have a FMV, fair market value, of $0. I have business rules that explicitly state I am not allowed to sell my locked positions, and from a balance sheet perspective, they contribute $0. They are not liquidatable, and that produces very interesting balance sheet. It means I'm insolvent, technically, and what all that matters is the cash flow. So this is a very unique balance sheet in many regards, because in traditional finance, you can pretty much sell anything. But I've constructed rules that indicate these assets cannot be sold, and they're worthless, yet they're productive. So for what that is worth, it puts the business in a unique situation. But that is what these crypto markets have created. There is no such thing as a locked position in traditional finance that something cannot be sold. A court could force a corporation to unlock an annuity, or I don't know. That's the whole thing about determinism and immutability. It allows for the statement of substance over form that these assets cannot be liquidated. They cannot be sold. You cannot extract the equity from a locked position. You cannot sell it, and that's pretty interesting. You could not create this business in 2019. It didn't exist as I've structured it. Hope that helps. You said only your basis is counted on APR. Okay, so that's just part of calculations. So obviously, if I buy something at 1.8 cents, wink, wink, Ramses, and it was producing what, 120% APR on my basis, and now it has gone up in price 4x. APR is inversely proportional to fair market value, spot price. That means the APR has come down that amount, those multiples. But that's irrelevant relative to my basis. So what I care about is if I buy $30,000 worth of something, and it's producing 100% APR, and the spot price has gone 4x in the money, which is down to, what, 25% APR? I don't care about the unrealizable fair market value of my position, making 25% APR. All I care about is the fact that I put in X amount of dollars, and I'm making that amount, 100% APR, on that amount of capital on a yearly basis. So my XYZ calculation is relative to basis, not about appreciation of the asset. And that's the perspective I choose to enjoy, because obviously you can readjust to spot price and just, let's say 4x, 5x on the money, and your spot APR is down to 25%, but now volume through the business goes up 10x on the money. So relative to spot on your position, your 25% is now 250% because there's 10 times more business. I just measure relative to basis, and it's easier that way in my mind. Hope that helps. X airflow, exactly what I was thinking these days. I just offer the rational perspective, and it's a minority perspective. And my entire perspective is designed around sustainable mentality, because that's clearly not common nowadays. There's not a lot of sustainable mentality out there. There's a lot of insanity and anxiety. And I want nothing to do with it. I don't want anything to do with insanity and anxiety. I want lowered blood pressure. I want to be calm, cool, and collected. Hope that helps. You're very welcome. I mean, in the end, I'm just giving a giant monologue and my perspective on things. And I hope I've always hoped, and that's all I want is I treat this conversation as a bit of a journal. It's very therapeutic for me, because the only way you know where you're heading is to know where you've been. So we've discussed personal things. I've told you guys my career path and what I've done. And I have to live with what I've done. And then I have to live with that threshold, that realization I had that I will never, ever, ever get to where I wanted to be working. I was at the top of the pay scale in New York City, software development. I mean, you can maybe get back then in 1819, like 220, maybe like a Peloton. That's some of my experience that I remember. Maybe at Google 200, maybe 220. And it was 2019, and I couldn't do it. This was earlier, actually. I was at the Huffington Post for a bit, which was AOL, which was owned by Verizon and Oath and Yahoo, and it was a whole fiasco. And I remember it was 180 grand in New York, and you got federal and state tax. And I had a very nice middle-class home out on Long Island. And the mortgage was about $3,400 a month, and we were paycheck to paycheck. Considering daycare in New York for my daughter was $1,800 a month. So I was like $5,200 out of pocket just between daycare and the house. And the 180 was probably around what? I don't know. It was like $9,000 a month after tax. What the fuck? Between federal and state tax and city tax, because I worked in New York. Oh dear. So and then I was never going to get anywhere. No one's going to throw around 220. No one was. And then lo and behold, Florida. And I realized there's no state income tax. Holy shit. I went from 180, I took the job at Universal Studios for like 120. And I took home basically the same salary. It was really weird adjusting to a state that didn't fuck you over like New York. So, I talk about this often. I have a great deal of animosity towards New York. It's probably the same sentiment I would have had in California. They often say if you can make it in New York, you can make it anywhere. Yeah, because you fucked in New York. The only thing you should be thinking if you're in New York, my 2 cents, is how to get the hell out of there. It didn't work. What other jobs could I have done? I went to school for electrical engineering. I wasn't going to make 200 grand as an electrical engineer, unless you're like what's called a resident engineer, which is head honcho of an engineering firm. And that takes 10, 20 years of veteran experience. So software, I wasn't going to get that either. So I wasn't going to meet my expectations doing the kind of labor that I knew how to do. It's, not something simple. Software engineering. We're talking about programming, mobile, Android programming. Anywho, I needed something else. Investing made sense. This was like, I still have some interesting shit from 2017. I built a portfolio in 2017 centered around battery metals, lithium, cobalt, nickel, and graphite. And it's still very critical materials. Composition of batteries are changing. It's an interesting one. Lithium iron phosphate is a very popular composition they're doing nowadays. And even that didn't produce revenue. It was equities and a brokerage account. But I still have that portfolio. Pretty much unchanged. And what's the target on that shit? Like 2030? And what do I do when it gets to 2030? I just dump it. And it goes 10x on the money. If it goes 10x on the money. It probably will. Which is why I haven't liquidated the portfolio. Still a solid portfolio. The problem is the time horizon. And what's it going to do? Once you sell it, you have cash. What do you do with the cash? That's why a good part I've come to this mentality about capital management. And that's why nowadays I tell you guys probably it is of equal importance, if not more importance, to figure out accounting. Because state and city and federal folks, regulators, are entitled to your labor, the revenue from your labor. So we got to use the rules to build something that's sustainable. That's kind of what I've focused on the last 2 years, is not just the investments, because that is kind of second nature at this point, XYZ. Buy shit that pays you. Be forward thinking for 8, 12 years, but now you got to structure it in an entity that will allow you to reach your expectations. Maybe you have thresholds, account capitalization thresholds, and there's entities and rules that allow you to capitalize accounts in much more favorable ways, even tax favorable ways. And that's why it's so important, because you have a goal and a target, and the rules allow you to pursue your targets. Anywho, hope that helps. Raul, honestly, this BTC chop is brutal, but what does it mean? It's irrelevant, in my opinion, my perspective. It's just cash. So what do you do with Ethereum and BTC? It's what we did over the last month, Arrow. I don't want to sell my Bitcoin. It's valuable. I can't collateralize, technically collateralize certain stablecoins like an Aave, but I was able to collateralize my Bitcoin, and I was able to borrow capital. I was able to borrow capital to buy an NFT that was opportunistic, because at this point I don't think I could get that kind of discount. So I acquired an asset that was productive. It is productive and will continue to be productive at an opportunistic price point, and I was able to pay off that debt using cash flow. I was able to reclaim my Bitcoin, which I have. And it was strategic. And now I'm thinking about what other opportunities I have. And as I've said for a while now, I'm pretty much done with investment season. And now I just get to sit back and let this entire shit show play out. Investment season is over for the captain at 71,000. And this is what I would encourage to be a good perspective in 4 years from now. You want to be buying in 26, 27, and then in 28, you get to sit back and let it play out. It's very consistent with like buy low, sell high, or how the general public talks about investing. Buy shit cheap. When it's expensive, you could sell it or just do what Buffett does and save up a huge cash pile. And then when everything crashes, you buy shit cheap. And I happen to have come to appreciate that kind of routine. So every couple of years, you get to buy discounts. So what does that mean? If you want to buy discounts, you got to save up cash. Save up cash when times are good and buy shit cheap when times are bad, because times will be good again. So you want to get on the opposite side of what the general public does. The general public sees things going up, up, and up, and they're like, I want to get on when it's going up, up, and up. So no, you want to buy shit when it's cheap, knowing that when times are good, particular things are going to do well. The right side of the trade, so to speak. Hope that helps. Anna said, do you see VE-nomics more sustainable in the long term than VE33? No. Base VE tokenomics as offered by Curve. They're the father of VE tokenomics. Requires organic opt-in participation. No protocol is going to be able to duplicate what Curve has created, because Curve is dependent on a federation of opt-in participants. What Curve created is literally what Raul and Brent are talking about in their stream they did today, 2 hours ago, or at least that's when he posted it, about 2 hours ago on the Journeyman on his channel. What Curve created is the epitome of the dollar as the chosen currency of the planet. It continues and has only been able to achieve what it has achieved because it has been chosen and selected by the economy of the crypto markets. It's opt-in, and it required this federation to work. It's the petrodollar. It literally is. It's really surreal when you put it into perspective of the mechanics of how the Eurodollar system works. VE tokenomics is Andre's child, and VE tokenomics is an evolution of VE tokenomics, VE33 tokenomics. Has built-in recycling. It's a self-contained entity in many regards, and it's a pure bifurcation of incentives. We'll know more in 4 years' time how well it did and how well it does. VE33 tokenomics has not survived the bear market yet, the same way that Curve's Federation has in 22 and 23, and attacks from short sellers and all the insane shit that has gone on. So we'll know more about V33 and more about L2s in 26. And we'll see what survives. And what survives is what matters. That's the meaningful shit. What survives the downturn and the collapse of liquidity tells us the resiliency of the system. And I'm sure we'll see an iteration on it as well. We'll see what's next. Something's going to be next. So I hope that helps, Anna said. I think that's an excellent question, and it's imperative to see what works, what doesn't, and be cognizant of what is the next step, the iteration, because there'll be something else, V6x6. But clearly it has worked. Why has VE33 worked? Look at the charts, look at the volume. I mean, it's a race to zero on fees, but the bifurcation of incentives allows the inflation rate to incentivize unlike VE was ever capable of. These charts are not designed to go up. Here's Velo, here's Arrow. These charts are not designed to go up, and that's what the layman will be critical of. There's a lot of folks that are critical. Oh, the inflation. Yeah, of course. It's not designed to go up. But it's designed that the business volume, 100% of business activity, is driven towards preventing it from going down. It's designed to be a bifurcated incentive system. It's designed to go horizontal. And that is literally not what the general public thinks when they think of crypto. But they're not looking at it with regard to economics. They're looking at it with regard to meme coins and 10,000x on the money and some relatively juvenile perspective on expectations. If Arrow is $2 in 2027 and 2028, and Base has $5 trillion worth of dollar liabilities and is cranking out $1 trillion a day in financial activity, you know what the revenue is going to be? And frankly, that also and that's why it's so interesting to think from a 4-year perspective, because if the revenue on Arrow is 200% APR, that implies it's not going to be $2. That implies it'll probably be $4, $2.50, $3, and that'll drive down the APR relative to spot price. APR is inversely proportional to spot price. As price goes up, it costs you more money to buy the APR. As price comes down, it costs you less money to buy an APR. So the interesting dynamic there in the next couple of years is, what is the rate of return of these types of systems? And they're going to be more than the risk-free rate of return. It's going to be more than 5%. I bet you they settle around 20, 25, 30% heading into like end of 27. It's a hell of a rate of return, risk-adjusted rate of return. You are getting compensated for your understanding of these systems as compared to other people being afraid of the volatility and not understanding the mechanics. Bifurcation of incentives. That was a big idea. No one did it. Andre thought of it. And now these systems are dominating the exchange activity on many chains, other than Uniswap. But the argument there is that that's the go-to place for newbies. I mean, nobody that has any understanding of these crypto markets trades on Uniswap. Nobody. You go into CowSwap. You go into 1inch. You go into DeFi Llama's aggregator of aggregators. Who the hell trades on Uniswap? You know who trades on Uniswap? If you go to Rabby or MetaMask and you use its swap functionality. Nobody trades on Uniswap, but look at the volume. The vast majority of volume is through Uniswap. It just shows you the maturity of the market and tells you the average capacity of the market actor. The average capacity is 0. So they go to the big brand, the gatekeeper. They go to the Uniswap. MN got it, my man. X-Airflow, this video should be displayed to every new trader. Now, I think about that often, and I try and have a balance of content. It's technical what I talk about, sophisticated, I know, and I try and offer it in a consumable way, the best I can, because obviously I talk Greek to a lot of folks, but I appreciate that. And that's why I love the questions. That's why I love the Q&A, because that allows me to answer the perspective of folks that are listening to me. It allows me to answer their perspective. And that makes the content more digestible. So please, 183%. 183 people still on the stream with me. I have a couple minutes left. If you have anything on X, you have any questions, or on YouTube, I'm more than happy to answer anything on your mind. We'll wrap it up in about 5 minutes. Lots of wisdom. Appreciate you. Diego. Last question for now. Let's see if anything else comes in. What do you think about the new Y-curve wrapper? So this is a great ending of a conversation, unless any questions come in. Yearn. Andre created Yearn. Andre is a main character, to say the least. He literally created Phantom. He literally created the Solidly concept. And aside from the general public's perspective that he's created disasters, that was only the short-sighted perspective. His ideas, all of them, have changed the face of crypto. Yearn is an extraordinary concept, and what it has matured into um, is an aggregator of functionality of countless protocols. Yearn is a critical piece of the crypto picture. Quite extraordinary what they have become. And Bantech has spoke, and I'm sure continues to work on their products, to my understanding at least. And I've seen their bug reports and triage reports. I've seen their code to a degree. And it's just an extraordinary business. It's a hell of a product, the new Y-Curve wrapper. And what it does, look what it does for Curve. And folks were angry at Yearn for just auto-dumping during the hyperinflationary decay period of Curve's inception. But now it has all these compounding functions and automated voting, and it's crazy what they do. And there's competition. Look what StakeDAO does. StakeDAO's business journey is extraordinary. Aladdin ecosystem is going to be extraordinary looking back in 28 and 2032. And Paladin and Warden, holy shit, what they're going to be in 28 and 32. 2028. For all you youngins, God bless you if you're 20 and you're listening. Because 28 and 32 are a little different than if you're 40 and you're checking back when you're 44 and 48. You have so much time on your side when you're young. So, and there's more. There's the Llama and Convex and Vodio and Frax. Man, what's gonna be in 2028 and 2032? It's very easy to get exuberant. It's very easy to get excited. I push it down. I suppress it. I have no need to get excited. I have a need to worry about next Wednesday and next Friday. That's what matters the most. XYZ, baby. Hope that helps, ladies and gentlemen. Friday, June 7th. Next week, I may have a light week with regard to content I offer you guys. I might not stream on Monday. We'll see. I have some content I'm recording on Tuesday, and that could be very interesting. I'll make sure to link it to you when it is available. I don't think it will be a live broadcast, but I think it'll be recorded. But you'll see it on social media. I'll pop it on X for you guys. But otherwise, I wish you all a good weekend. Please, you should be relaxed. You shouldn't be crazy about things. Control that anxiety. The smart investor is a much better investor. So I look forward to us talking again. I'll see you guys next week. Catch you then. Peace.